It was just so low, and they all end up like just.
Well, it wasn't when you actually put it on, was it? It was you didn't know that was going to happen.
Yeah, exactly. So, okay, so,
Hi, everyone.
hey, Danny, how are you?
Hi, Danny.
Good.
Hi.
So we had, um, so yesterday we were looking for longs only, and let me just turn this off. Oops. Yeah, had a only looking for longs. We got some nice longs here where price pushed up, and then came down, and it pushed deeper into this yellow zone, which is very nice. Price pushed up. I did go for a long in here, and the runner got stopped out, but then it pushed up again. I didn't do anything because I was busy afterwards. And I saw price was retesting this resistance again, and then I was thinking, all right, finally, if we could actually break above here, I'm gonna trade from here to here. So I had that as a buy stop order, um, and just left it there. And it got triggered by this thing. It got triggered by like I got slipped, and like the buy order, which it was like here. I thought once prices, I saw it come down again. I thought the next time it goes here, it's going to go straight up. So my buy order was here. My stop loss was about like 1.5 to 1. And my TP was here. And you know what happened is my buy got slipped. My buy entry got put here, and I just took the TP, and the TP didn't get slipped. So it ended up being like a real, a real nothing trade.
That's usual.
Yeah. So it's just like a 20-pip trade, something like that.
Was that why would it slip? Because it would move so quickly.
Yeah, yeah. It moves so quickly that the time that it goes to because the order's with the broker, and then and the broker, and then you got the market, and the brokers send signals to the market, and the market sends price to the broker. So the time that the market sent the price that we'd hit my buy order, which is at say let's call it 24320, because it moves so fast that it only takes like it's very quick. But the time that it sent the price to the broker, and then the broker said, okay, yep, buy, because it was moving so fast, by the time that it just did this round trip, price had just continued going up. And by the time it got to the market to execute, it was here.
When you say it's quick, are you talking about seconds or milliseconds, or are you talking about minutes? Or
Milliseconds, like
bloody hell, that must have gone quickly.
yeah, like I think the latency is, you can see it on the terminals. So I think we're talking about 110 milliseconds. So there's
Bloody hell.
1,000 milliseconds in a second, isn't there?
What was the cause of that candle, you think, Hayden?
It was the news EU and US closing in on a trade deal. Oh, Michael got slipped as well. Yeah. So yeah, bit unfortunate. So because we're looking for buys, and then as price came down, I missed the buy from here. We had a level across here. This is from but remember we were saying, like, if we actually got back down to this Asia, like this is the Asia demand zone, and we did say like yesterday would be a bit difficult because the Asia session was so big, and it just had to, like, there was so much liquidity to the downside that it just eventually took all the liquidity. German took the London low and then pushed, and I just wasn't prepared to take a trade at that time. And then I wasn't really sure what to do. I had some trades set up on the US side of things, on the US stocks, which never got hit either. And then I had that buy stop that was sat there from a few hours beforehand. But then this guy, I literally was getting in the car to go get Maddie, and I saw that the headline came up on my phone from Financial Times saying EU closing on a trade deal, and I was like, oh. And then I opened up Tradingview, and I saw the response, and I was like, oh, okay. Then I opened up MetaTrader, and I saw I saw that I'd be because I can't access it when I'm out, so I had to wait till I got home.
Not including interest.
Unless I get Wi-Fi. If I get Wi-Fi, I can open up my VPS.
Not including interest.
If I don't have Wi-Fi, my VPS won't let me in. And it's kind of designed that way so that if I'm really desperate to manage my trade, I should be able to get Wi-Fi from somewhere. But it just stops me from out for a walk, just opening up the phone and having a look, and then somehow being pulled into a trade. So when I'm out, all I saw was a headline, access Tradingview. Can't access my actual MetaTrader, so I had to wait till I got back, and I saw it, and I was like, just a little teeny tiny profit. Anyway.
What time of day is that over there, Hayden?
5 o'clock.
5?
Yeah, PM.
Yeah.
All right, so today we have PMI. Let's look at today now. Let's clear all of this because we're in a whole new area now. We're at PMI day. PMI day is notoriously messy. But the only way that I see that's not messy, I just can't. Oh man, yeah. I mean, it's messy because you've got so many data points coming out, but we don't often have PMI and also interest rates. So normally we're in a real bind here because on one hand, the trade deal, we've got a lot of optimism from that, but it's a bit light on the details. It's just that they're approaching the deal. So I could absolutely believe a world where people start questioning some deals, and maybe the euro talk's a bit tough again, and who knows what comes out of that. But on one hand, what they've done is they're probably sucking a lot of buyers on that optimism. So, but we're already sort of fading down here, and I've seen this happen before, where when German wants to go, not much can stop it, and it can be very hard to actually it's the previous session. It's very hard for it to break the low, and if it does break the low, it's only by a little bit before it really powers. But with PMI day, I actually think this will probably take a back seat. I think the optimism from that trade deal will probably outweigh the impact from PMI. But PMI day is like we just got to be aware that there is news events all throughout every 15 to 30 minutes for the next couple of hours. But then it's the interest rates. Now, what I was thinking was potentially if there was no trade deal outline met, I thought Euro might say something at the press conference where they reference the potential tariffs and the impact of what would happen if they have to withstand 30% tariffs. But if they look to say they're going to accept a 15% tariff, maybe they don't reference it as much. So it really puts a spanner in the works. And what I was kind of planning for the move is now there's been some new information that now things are. I just didn't think that this was. I hadn't planned for this optimism yesterday. So now I need a bit of wait and see. I'm gonna have to trade technicals just zone to zone because the fundamentals. I feel that there's too many things going on that I'm just not certain on. There could be so many different ways that this goes fundamentally. So I'm gonna have to just ignore fundamentals, I think, for now. From a supply demand point of view, all my levels that I was looking at have got blasted through, but Asia is out of the market already because they just got taken down here. There is liquidity from people that are holding buys on the optimism, so we could definitely go and feed on some of these ones. We've got a nice little wick here, so I could see a world where we go down as well. But the way that London has been reacting, we've got 5 minutes, but the way that they've been reacting in the last like 6 sessions or so is we'll just go back to we'll go here. Can we go to Thursday last week? Okay, Thursday last week. Price pushed up in pre-London, came back down, and then London had to. It just pumped pretty cleanly for the first like 30 minutes to take out the high to drag buyers in before then coming down and getting a better price point before then the buyers got set up for the rest of the session. But so London went up, they did a buy to sell to buy, and they knew that there were already there would be people that are willing to take those buys off their hands if they could break out from here, and eventually, but they had to come back down eventually to come and collect Asia liquidity because Asia liquidity was untouched from Euro. Then we go forward to the next day, and Asia was very bullish, and New York was very bullish. So with all this liquidity being sat here, the easy job for London was to just go up immediately off the first 5 minutes, break the high, drag buyers in the market, and then go and proceed to de-risk and get better price points from below. Then we get to Monday, and Monday as well, Asia low was still left untouched, and because price had pushed up, what we had some liquidity up here that London can go and just break above, drag buyers in the market before then going and collecting the liquidity from below. Then we get to Tuesday. Tuesday we had Asia was pushing down. We had some news, and remember we were bearish on this day. Price spiked up just to get a better, like to come back to like retest this Asia liquidity before then going down. And then we had Wednesday, which is kind of similar to this in reverse. We had a huge Asia session and we needed price to come down and retest this area, which did in New York session. But because price was so bullish already and London was already starting from so high, there was no real point for them. They just didn't need to go up to grab buyers because there were so many buyers already in the market with the Asia session so big. So there was no need to actually go higher. And that's what we're waiting for, is just being careful that they didn't go higher. But price shot down to a better price point, which we took a bounce from around the 50% of Asia. Then price came back down, gave another bit of a bounce. But because it's such a big Asia session, it can be really hard to wait for it to really get down to this level. Now today, we don't have such a big Asia session. We are already breaking these lows. Germans are already taken a bit of this Asia out. So because we had such a heavy New York session where they didn't take profits, I wouldn't be surprised to see London pump up price. Maybe they want to sort of retest this Euro area before then maybe going back to get some better price points of interest. But if there's too much weight in it, and they've already got so much momentum, because there's so many buyers that are probably still in the market here, London could just push down from the open. But I'm hoping that London in this next minute actually pushes up into this area, and then we start to see it trade back below the London open, and then I think we could potentially correct some of this move, because I do think it's still a bit light on details. This trade deal. And there's plenty of things that can go wrong with this trade deal. I reckon that there's probably some sort of distribution going on up here with Euro interest rates. So I'm kind of thinking if we can retest this area And then if we can retest this area and then trade below, I think we can target this wick. That's what I'm kind of thinking off the bat. What do you guys think? A good chance that would just go straight down, which would be a pain.
I reckon she'll go down before she goes up, eh?
Here you go. Here's the thing now. So this started moving a bit too fast this last minute. Felt like they already got, maybe London started a little early. Yeah, man. Looks like they did start about a minute early. Price has already gone down 47 pips. Be careful you're trading prop firms because of the news, of course. P&I day is going to be... There's a lot of times that your trade, if you win, can be invalidated if you close it around that news. Okay, so really unfortunate that it did break the low, because when German wants to run, it can really just take the low and then just push off. So I was really hoping that we would start somewhere a bit higher. I really hoping that minute candle wasn't there, so that we could just go straight up and then come down to look to take the low. Now trading underneath this London Open, being here, if price does push up into the zone, I mean, it's pretty risky, man, to take a sell from up here with all this optimism, and we're already swept the low. That's now a difficult trade. And then if we can actually trade underneath the London Open again, I do think we go lower. But because it this 1 minute candle, because it already pushed down 40 pips just before the open, it means that this open price now is 40 pips basically lower than where I wanted it to be. And if I'm only targeting this wick, now that wick is it's like a 20 pip space for me to take that trade. Whereas before it would have been around 60 pips if the open was basically where this candle was. It would have been trading down there. Man, it's a real pain with euro interest rate hesitation and trade deal being announced the day before. Or rumors anyway. It's just rumors, man. Buy the rumors, sell the news, perhaps. But what a pain set of circumstances that we got for today's open. And any trade you get, there's the 8:15 is the first set of news, the French side of PMI, 8:15, so 12 minutes away. All right. Well, we'll hit that first little zone. This little zone here. It's having a little bit of a reaction. Could be a bit low volume as well. So if a low volume because of so much news uncertainty, then we could actually. I know it looks like high volume, but you've got to remember as well that a thin market doesn't take much for moves to occur. So if it's a thin market, we could actually see a lot of these little levels hold up and have reactions at all these little levels. if we're trading underneath this open, then there's downside. But the downside, because it dropped on the open, sorry, because it dropped a minute before the open, it ran us out of some room, because now that wick that would be an easy target is only a little bit lower than this wick, which I was hoping that we would have been opening up here. We'd have a lot more space we could play with if we have to just avoid fundamentals. Okay, break the open. Break the open and come back down to this little area. So retested the open. So this is the bottom of that wick, this green line. Come on, drop. Come on. Get down. Come on, drop down. Probably just be in this little holding pattern. I'm sure this will just explode up if PMI comes in good. Okay, 5 minutes, man. 5 minutes for this news. Stock's bullish, sat flat. Man, SAP never recovered yesterday. Still stayed down like 4% for the day. Okay. So this one's coming up very soon. What do you guys reckon? What do you reckon it's going to do? No idea. Yeah.
I thought it'd go short.
Yeah, I thought it could take out that wick. It's kind of creating the support though.
Yeah.
10 seconds, and then we should see some volatility here.
Will the French PMI have a big effect?
Yeah, it'll on the 1 minute time frame it will.
No.
Higher time frame you probably wouldn't notice it, but lower time frame should be some new some effects. So let's see. So it came in 49.6. They forecast 49.3, 48.4. Oh, yeah, okay. No real no real impact. Came in pretty much in line with all expectations. So no surprise. As in, there was no surprise. I'm not saying that I'm not surprised. I'm saying that there is no surprise result compared to what they had forecast. So if there's no surprise result, yeah, the impact's pretty limited. I don't think it's gonna, unless there's like a big impact, like unless there's unless they've predicted something and it missed by quite a bit. I really don't think PMI is going to have much effect on a day like today when we've got trade deal and interest rates. I think they hold the driver's seat.
Going down.
Come on, man. But if we can break here, I'd love to see it get to this green line. Come on, keep dropping. So it's just throwing up dojis at the moment. Come on, breakdown. Okay, the next one now is going to have more impact because it actually is the German one. Let's go to France 40. What's a France 40? Do they... Oh, far out. See, France 40 is doing the move that I kind of hope it's going to be on German. Look at that, man. Jeez. We're watching the wrong pair. France 40 has just been dumping. What about stocks? Stocks is doing the same. Germans, I wonder if this is a delayed effect.
Yeah.
But German stocks are all up on the day. And German's holding up here at the moment. Yeah, France is down 1% already for the day. German's flat. Man. So I hate PMI day. It just seems to always be like this. The banks are doing well? Oh yeah? You mean the European banks? Like Deutsche and UBS and that? Yeah, okay. Yeah, not surprised they do well. Yeah, look at this though. What ugly price action. You see yesterday when I posted in the Discord like this? How this was crazy. Just terrible. For a good nearly what 2.5 hours? From 12:40. No, for 2 hours, price really just look how many dojis got put up. Like shocking price action here throughout the middle of the day. All right, well, we're failing to break down. So the more times that this support gets hit, it's just the support's not very, like it's a pretty low support. But if we did break underneath here, I'm sure this wick will get taken out. But if we've taken out the low already for euro and we are building a support, this is left untouched, this little area of supply. So I'm kind of thinking that unless we actually hit this level or break underneath here, this is kind of like no man's land. You guys see anything that's tradable? We took out the doji, 10-minute doji high. Don't see any triple wick areas around price either. Yeah, I mean, if we got some sort of news that was counter to yesterday's news and it starts getting faded, I think the easier trade to be taking would be for price to be breaking underneath here to fill this candle. And we've got a little zone under here, but there's a zone under here that we could target. So that would be about 150 pips with a potential zone. We just have to be careful of this area as well. Have to be careful of this zone just because there's the previous highs. Otherwise, this is the area where price accumulated before the explosion. So if we are fading this move, there's potential we can correct that whole thing. We need to have some negative headlines to be the spark. Okay, so throwing some dojis, took the high. Is this the time now? But we're within 6 minutes of the German PMI. So we're trying to retest this support again. And now we're going to break down and hit this green line. It definitely looks like distribution to me. So with the markup that happened yesterday, with all this big push, this does look like distribution. So with distribution, if they're like, we don't know if they're distributing, then it probably will be a headline at some stage. We just don't know the timing of it, but there'll probably be something that causes it to collapse. But if a headline doesn't come in, then they could actually start accumulating again without having a drop off. But with distribution going on, it just takes a headline and it will collapse the whole thing. I'm interested in Aussie Swiss as well, and Kiwi Swiss as a day trade. I'll cover that once this news is out. So 4 minutes, and they get the German side of things. We've got 2,100 companies reporting earnings today. All of these companies. It's a lot, hey?
What's that there you're looking at, Hayden? What is that?
In the news calendar, this one here.
Oh, okay, yeah.
You can break it up between economic, earnings, revenue, dividends. Yeah, there's some stuff in here that I actually want to look at a bit more for like options. Where is it? Where is it? How did I get it before? Oh, no, you've got to click on the actual company. That's how you get it. You click, like, say, for example, you go to SAP. And then you can actually bring up a bit more information about it. And you can have a look at the income statement, more financials. You can actually get the like the put and call walls and everything. Pretty good, but lots of information here. Okay, so 2 minutes away. It's looking more and more like it wants to break through here, doesn't it? Just a matter of time before we drop down to this green line, take out that wick, which will be this on the hour. No, 15 minute. On the 15 minute, it'll be this wick here. Okay, it looks like it's going to drop. 10 seconds. Either nasty fake out or we just go straight down. Come on, brother. Okay, so 50.3 versus 50.7, 49.2, 49.5, 50.1, 50. So pretty much in line with expectations. So nothing. Nothing again.
Hayden, that FX lib you've got indicator, you don't need to have it on the charts. It does it all in the background.
Oh, sweet. Cool.
Yeah, you can do it. You don't need it on any chart. It all works in the background with Tradingview.
Okay, great. Thank you. Yeah, I was going to ask you that actually. That's on my little list. You just got to publish it, is that right? And then it works in the background.
Yeah. No one even knows it exists, but you need to put it on your chart to publish it. That's all.
Right.
Brief.
Gotcha.
For a couple of seconds, you publish it and take it off.
Yeah. Okay. All right. Come on. Break down. Oh, yeah. Come on. Jesus. I mean, there could be a world where there's distribution is still going on. So they don't necessarily want to collapse price. They're just happy to keep it stuck in the range until the news.
That area that you've got at the top of London.
Yeah, this one.
The small zone. Yeah, there. If you zoom out and
it's like the center line, isn't it, for the day? Even from yesterday as well. I mean, if everything comes in positive and in line with expectations, and no headlines, no one questioning things, this accumulation here, if this is accumulation, not distribution, and price then rallies higher, it could, like the momentum for the day, we could have like another daily candle that's similar to this one. And this could be like the low of the day. Like when we have had breakouts in the past, kind of like this day, like when we had like a bit of accumulation and then price finally broke out. Then the next day it was just a little pullback and then it really pumped up and then the pullback happened the day after. So that could be happen. Like this is the day that the news got dropped. It should still be accumulation. Interest rates come in, maybe they say all good things, and we can see another daily candle that is like so. Like it actually just does another daily candle like this. And then we could see Friday, Freaky Friday, be the distribution day, where we see the starts of the pullback. So yeah, I'm kind of accepting that as the scenario as well. And then you kind of just be a little bit ahead of, like, feel like we're just one day early trying to see if we get that kind of fade. But for it to fade this move, it still needs a catalyst, no matter what. And if that catalyst doesn't arrive, then it's just another leg higher. But it's, yeah, there's support at the moment. Maybe if it's not breaking, then I'm not sure if this level would actually hold. I think the optimism could actually hold strong. So again, got to make sure you're careful with your risk. This is a kind of day that if price does start breaking down, to go with that theory, if you do think it's going to break down, make sure your first position is quite small, because it's kind of a position that you'd want to scale in on it. So go in quite small. If it goes against you, then look, it don't matter. Like maybe you risk 0.1% at a level that is a bit risky. Just see if we can fade some of this move, and you can go in with like 0.1% risk, for example. Say from like this level, and you have like a fairly asymmetric risk reward. Like even down halfway into this candle, you're looking at like between a 4 and a 5 to 1. And this is still a very bullish day. Like, you know, this is just correcting like half of yesterday and coming back to these previous resistances. But if you're risking 0.1%, if it goes against you and you lose 0.1%, there's no dramas. But if it is starting to push bearish, and it's reacting and it's threatening to break this level again, you can add another 0.1%. And like if it starts pushing down, you think, oh, this is looking pretty good. I'll risk another 0.1% to see if we can push down. So what you're actually risking now is it'll be minus 0.1 if it straight loses. But if it does react and coming down, and you add another 0.1, you can actually just be break even and bring your stops to like here. So for both positions. So really, you've only risked 0.1 to begin with, and if it just straight lost, it's just 0.1%. There's nothing. If it comes down, you can add another 0.1 with a stop loss here, for example, and it's going to be either, at worst, if it triggers your trade, it'll either be break even, or if it does break down, just those 2.1%, the first one is looking at a 4.5 to 1 basically, and the second trade is like a 5 to 1. So collectively, you're only risking 0.1% to get a full percent from this trade. So it's very low risk. You see what I mean? But it's actually pretty good risk reward by doing it this way. And if it was actually even further coming down and breaking these lows, if you really wanted to add more weight to it, you add another 0.1, bring your stops to the entry of this one. Your first trade, your stop is here as well. So you'll be up more than 1 to 1. So you're basically 0.1%. Your second trade's break even. Your third trade, you might lose 0.1%. So it'd be a break even total. But if they all did play out, then you're actually getting even more for it. So you've effectively got in a very low risk, but you're scaled in, adding volume, but never actually. So you're adding volume for your TP, but you're never actually taking on more additional risk than your first trade at 0.1%. That makes you understand what I'm saying? So that's the kind of day like today, when if it can actually come down here, we can either just sort of go all in with very low risk, but have a way that you're going to scale into it, never actually take on more than 0.1% on a day like today, but we can actually get like a good, really good risk reward from a couple tactical scale in entries. That's better than trying to get that's better than trying to go for a trade, like say for example here, with a healthy stop loss and a here, but you just go all in of like 1% risk. Because if it goes against you and you're down point, if it's looking bad and you lose 1%, but you're trying to make 2%, I'd rather just go in with small risk with a couple tactical scale ins to try add weight to it. I wouldn't want to just go one position, 0.1% to try and make 0.3% or 0.4%. I'd want to try scale in on any low risk entries. But when you scale in on low risk entries, you scale in such a way that you never actually take on more risk to lose, but you just add more weight to win. Like, it's a very effective way of trading if you can do it right. And it's good for days like here when, to me, it's pretty uncertain. So if I want to take a buy, for example, flip this upside down and then say, look, maybe this is the low of the day, go in for a 0.1% risk, say here, thank you, and there's probably much more upside. There's much more upside if this news comes in and everything's positive. And if it is, take 0.1%, looking to make like basically a 2.5 to 1, add another 0.1, break in above, okay? Stop can be a bit tighter, going for up here. And then if it's really breaking and clearing these highs, have another 0.1%, a bit higher. And then collectively, if price can get to here, and if it can do it fairly like smooth, then collectively these 0.1% risk trades would equal 1% roughly, or maybe my stop's a bit too big here, but like say it's going to be 0.7%, but I've only taken 0.1% risk on the initial position. And some people might say, oh, that's just way too low. 0.7% was, I'd rather go much higher. But when you're trading for a living, you kind of got to think like you might want higher percentage because it's higher dollar amount on small accounts. Yeah, I get it. But that's a capital problem, not a trade problem. Because if you've got decent capital, what are you trying to achieve in your trading? Like if you could achieve somewhere between like 5% a month, maybe 10% a month if you really wanted to stretch it. Even if you're trying to do 10% a month, that's over 4 months. That's 2.5% a week, and then across a day. To do that, if you can be quite consistent in your trading, that's assuming all winning days, but that's 0.5% for a day. And if you fell short and you only made 5% in the month, that's still very good returns. 5% if your account is reasonable size. So really, you only need to hit, 0.5% every. You don't need to hit it every day, but if you can get 0.5% a day and you're only taking on 0.1% risk, that's a very good return. And if your account's of reasonable size, that's purely how that would be excellent for trading large accounts. And if you're trading small accounts, then it's really just a matter of time about trading this way consistently long enough to accumulate capital, either through prop firms or scaling your own account up. It's not about actually taking high risk trades on smaller accounts to grow it. It's about taking good risk management to confirm with your own confidence that you can trade well without taking on big amounts. And as your account grows, because of your trading, every time you get a paycheck, invest into your own account and grow it that way as well. But when you do it the other way around and you try to grow a smaller account by taking high risk trades, you will have some losses in there. And if you have a couple impactful losses, you're not going to want to actually put money in your account to grow it, because you feel like your trading can be quite volatile up and down. So that's, it's a catch-22. So days like, days like this when the outcome's a bit uncertain, you can take a risky bet because you're not really certain on a bias. Just go low risk, but tactically think how you can scale in without adding, because you can still pull a half or a 1% day with such a small position by scaling in as it looks, as the situation improves. But waiting for it to improve, waiting for it to get all the way up here before you scale in, before you even take a trade, pullbacks can happen for New York and go up, and it could just be tactically you just get in the wrong spot, still take a loss on the right direction. So kind of rather days like this when you're a bit uncertain to just go in really low risk to start at the back, but look to add weight to the trade rather than going too big on your first position, taking a loss, losing confidence, getting frustrated, prices ranging, and then it was purely just that we wanted the trade now when we're already flagged that these conditions are not good for getting a great position in with PMI day, interest rates, trade deal yesterday announced, huge move, huge volatility, heaps of people in buys that might want to get out of those buys if they perceive some risk. Like, it's just going to be pretty difficult to go all in on a trade first go. And if you just patiently, you come back, these are the days that you come back hours later and you're like, shit, man, there was such a perfect opportunity. It was just, happened at 10:30, not 8:30. I'll be back, guys. I'll be back in a couple minutes. Hold on. Sorry about that. Louis Vuitton earnings today. Okay, so breaking down. Now can we get to the yellow line? Yeah, green line. Looking good now. $16 pips to the downside.
Are you in a trade, Hayden?
No, I'm just flat.
So what's your bias now then? It's going short if it stays below the green line?
Yeah, it's a very tight range, unfortunately. Not really overly keen on the shorts. I think there's probably a good chance that taking out that wick, we probably get a good chance to go back long.
Right.
But I want to see it come down to here, to this green line. If this was 40 pips space, I'd be more keen for the shorts. But it's only 18 pips from here to the green line.
Yeah, you're looking at the bounce, so you're going to go long once it hits the green line. Think about that.
Yeah, I'd be more interested in it. I'd be oversold in the stocky as well.
Yeah.
I think there could be like a little release of liquidity underneath this bit. So I'd be more interested in longs if price came down to this bit and then closed back above. Then I'd be more interested in longs.
Hayden, on the 1 hour, I've got another point of interest just below that, the bottom of that inside bar. The blue one, yeah.
Yeah.
Because it takes that. This area for bias.
Oh, good. If it takes this inside bar.
Yeah.
This grey section. Mm-hmm. Yeah. At the moment, there's no divergence showing up. But sweeping these lows at the moment. You got a pending down here? Okay. Yeah, I might miss it. Another thing, I'm not really too keen on the selling. This is the low of the day. So if this is going to be a big bullish candle, it's just giving people so much time to have a look at it that you could very easily be buying the absolute low of this. So I'd actually prefer, to be looking for longs at the lows of the day. I just think it would make more sense to tap into this little zone. But yeah, I think that could be a good shout. This could be the first trade of the day, the 0.1% for a long around here somewhere. Especially if it can actually push down and show some divergence. I think I'll do that. Take a swing at a long. So the next piece of news coming up in 4 minutes.
6 o'clock.
Yeah, it's this Eurozone PMI now. So we had France, we had Germany, and now we get a composite of the Eurozone. So this will be a collection of Germany, France, Italy, Spain, Netherlands, Austria, Ireland, and Greece. Yeah, I'm gonna try to target some longs soon. So most likely this will be a nothing event as well. So no surprise in the other two. I doubt there'll be a surprise in this one as well. At the moment, this is looking like a classic fake out. Just range. And then breaks the low of London low. And then it's now just a fake out, isn't it? Low volume, man. They're just accumulating. Or perhaps they're distributing. But more that's looking, I think it's going to just be a bit of a fake out day. These are days you just need to, you need to have heaps of patience. But we'll see, because I think the trade I'm going to take, we'll see this news comes out, but the way this is grinding, if this has indeed picked up enough people taking sells at the lows of the day with the stocky oversold, the liquidity point that would make sense is this area. So there could be a trade to go for basically doing something like this up to here. Can do something like that. Okay. So the news is out. Let's just check, see if there's any surprises first. So nothing yet. It takes a little bit for it to pop up.
So this is a bit higher.
Okay, so Flash, the composite, better than expected. Manufacturing, just slightly better. Services, quite a bit. Actually, services quite good, 51.2. So yeah, probably just up to here now. See if we take out the London high. We've accumulated enough. First hour is just basically a nothing candle. I think that was probably the low for a bit anyway of the day. Kind of lined up with this little area. These like the hour on the hour candle, kind of like a little doji around the body of the dojis, like here. Got a little triple wicker on this point on the 3 minutes. So I think if this can actually clear it, then this will create its own triple wicker on the way up. So breaking this high, yeah, that's going to be my trade. If it breaks this high, I'm looking at this. If it can pop up, looking like it's gonna, and then gonna look for this. To me, I think we just keep on just grind all the way up now. Now that we've kind of got, the next one is going to be the UK PMI at 9:30. Not looking for like massive moves just because of the interest rates, but probably can just stay in this, like stay contained in this period. Hasn't broken the high yet, so this buy order is not valid. I do want to see it break the swing high. At the moment, you can see like it's created the neckline at that swing high, so it hasn't done anything just yet. But it's looking like it's just going to grind higher. I think this low here probably pulled people into sells. This is divergence as well. If you look at the faster stocky, like either this swing, I don't particularly like these middle swings, but you've got divergence down there. But it hasn't broken the high yet, so I'm not in anything because it has to break that high for me to be interested. So just put this out of the way because it needs to go up here. So at the moment, I'm still looking for it to go up. Otherwise, that triple wicker on the 3 minutes can be holding a bit more weight. We'll see. We'll see if this creates a bit of a bottom wick. Very slow, man. Very, very, very slow. I'd really like to get buys from underneath here. If it could do that, that'd be pretty sweet. So hopefully it does drop down further. check financial juice. Are there any headlines? So let's leave in the bottom wick. See if we can just break this swing high. This bit here. Bring those buys in play. While we're waiting, what I think is going to be a decent play is with all this like optimism being put around and the way that things seem to be globally improving in sentiment, I think Swiss is going to be the one that gives things back. Aussie and Kiwi will definitely benefit from from better global sentiment. So that's why we're seeing Aussie and Kiwi pairs do quite well. And Swiss has been, like when we look at Swiss overall, Swiss has been so strong. So where is the Swiss index? Okay, it's Canada, Swiss, yes. So when we look at the Swiss index, you can see like it's been on an absolute tear. Like we're at levels we've rarely been in the past. So I think we could see a little bit of Swiss weakness, as in why I think we could see Swiss weakness is that at the moment the Swiss themselves are just not really investing outside. So at the moment it's really dried up the supply of Swiss that's available to the world. So we never broke that high. So there's no buys just yet. And then as things improve, Swiss will start again buying overseas assets that will increase the supply of Swiss, and we can see Swiss unwind some of that safe haven properties. So Swiss being the strongest currency so far for this year, outside of Europe, I think we can see a bit of unwind, right? So I think as like a days trade, not so much like Swiss swing trade strength. But like on day trades, I think we can look for Aussie Swiss to recover a lot of this move, because it's been it's been beaten down quite a bit. So I can easily see a world where we come back up and at least challenge like the highs of this bit to run the stops, and then potentially run up to some of these other levels. So I quite like this idea. The good thing about Aussie Swiss is that Aussie's been beaten down quite a bit. So if you actually take longs on Aussie Swiss and you have to hold for a few days, if you give it a bit of room, it's a positive carry trade. You actually make quite a bit if you hold Aussie, if you hold in longs, because of Swiss is so low with interest rates. So any buy you put on this pair, for example, if I put on a buy, I just got to bring it up. Any buy I have, that's annoying when I have to log into the VPS. Okay. So if your account is funded in Aussie, every every lot that you have is $3.50 that you make in the positive swap. If you're short in, it's minus $7. And if your account's funded in pounds, then it's even better. Oh no, sorry, it's worse. Sorry, because it's got to go the pound to Aussie. Yeah. So you make £2. No, it is better. It is better. Sorry, because it's in pounds. It's not in Aussie dollars. So it's a little bit better. Okay, we're going to break that high now and bring the buys. That kind of pullback probably picked up some buys already, but if we can break this swing, break this resistance, opens the door for upside. It looks like it's ready for it now. Having this pulled back, this looks like a bit of a fake out on the 1 minutes. We already had the divergence on the 3 minutes at these levels, at these lows. So I think there's a buy on offer here. Okay, I think we just took the high out. No. Oh yeah, it took the high out now. So I think there's buys on offer to go back up. Oh, hold on a second. Got a little thief in the bin.
What's happening? What's happening?
Oh, she's locked it. Okay, I'm gonna buy, guys. I'm gonna buy this thing. Okay. Bought in here. Target up in this area. If we can close above this red candle, I'll buy more. On the close above the red candle. So for this, I think here would be nice. For Aussie Swiss, this little area. Kiwi Swiss has already come back oversold. Aussie Swiss, yeah, it's really got divergence. I don't want to buy up here, but if it came back down, I think would be oversold. I think it could be a good shout. Okay, just close above. I'll buy some more as well. You think it's worth trading on PMI days?
Well, today's been painful.
Yeah.
Maybe it's worth starting later.
After it's all done. Yeah.
Mm.
Yeah, if it's a Tuesday or a Wednesday, I can do that. And it's not often it's on a Thursday. I think last time it was on a Monday, actually. So when is it? Why they choose this day? I don't know. When's the next one? If the next one's on a Tuesday or Wednesday, we'll just start later because I really hate these days. So August 21st is a Thursday again. Oh, but we'll have the baby by then. So we're not so limited. Then September 23rd is on a Tuesday. That's fine because Maddie will be at nursery. Yeah, okay. I think we'll start doing that. We'll just on PMI day, we just wait till the news is done. We just won't sit through it because it's kind of not really worth trading because it's more often than not. Like there's on occasion we have seen. I think maybe there was one that we did see. It was a very good, like it was actually a really good day to trade PMI. For some reason, I think it's because it was a miss. It came in. I think they were expecting bad numbers, and I think they were expecting like a 49, and it came in like a 51 or something. So then it actually had an impact. But more often than not, it's just a day like this, and it's just it's almost counterproductive because you sit through all of this, and then you're fatigued by the time that the move does happen, like 2 hours later. It's almost better just to wait, do things before sitting down at the computer, and then just coming in and spotting the move, because there's usually a good move at like 10:30. At the moment, it's just been really hard with childcare. Because I'm going to have to get going soon. They tend to get the forecast right in Europe. Yeah. Yeah, I don't think there's anywhere near as much manipulation as in the US. It's ranging, man. It's painful. So the 5 minutes threatening. It's threatening to look good. Coming back, retesting. If this 5 minute candle can just... If this 5 minute candle could actually close into these wicks, it would actually be looking very promising to push up. At the moment, these wicks, it keeps on trying to push up, and it's absorbing the buyers. Push up, absorb 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 the buyers. And if the buyers keep getting absorbed, that if they've got enough buyers with stops being underneath here, then they could easily run the stops then and get a very nice low entry, which would be, this is I'm still planning on buying from this level. I just thought with this candle on the 3 minute, it looked decent where it pushed up. So it was like a 3 minute entry, but on the 5 minute, I'm still actually preferring buying from this level. So I would consider getting out of this trade because it just doesn't seem to have the momentum right now. And without that kind of confirmation right now, if price did break above and we get that momentum, I think we can carry that momentum up. So you can get out, we can get out for break even basically, and wait for a better confirmation above here to go long. But the more it hangs around this area, it becomes more of a 50-50. And it becomes a game of hope then. And there's many times I've just gotten out and it's just run. That's the risk I take of getting out for break even. But when it has done this, I do feel like it becomes a bit more 50-50. I don't think the odds are quite as strong as they were when price, if price just came down and pushed up quickly. So, okay, if it goes now, I'll shelve that plan. But if it rejects again, I'll just get out. Because this is the wicks again on the 5 minute. So how long we've got? We've got 5. It's in the first minute breaking the high. I'm just going to get out of it. I'll move my stops to break even. How about that? So if it does, oh, I'm out. Yeah. I'm out of it. Because breaking the highs in the first 1 minute with 4 minutes, if it was up here and it was the last minute of the 5 minute candle, I think there's a pretty good chance we're going to close. But the first minute of the 5 minute candle, to me, is likely it's just going to leave another top wick. And you're right, yeah, Michael. If it can go either way from here, so the plan was for it to break the high, come down, retest, and then leave, like without mucking around too much under here. Yeah, anyway, I'm out. So I'm not overly disappointed because we've got UK news now in a couple of minutes' time. So I had to make a decision on the prop account because if I held any longer, I wouldn't have an opportunity for another 4 minutes. I suppose I could have closed on the prop account and left the personal running. Because then I could have gotten out on the personal at any time. Oh well, I didn't think of it at the time. Okay, come on, push for anyone that's holding. Okay, now it's looking pretty good. This is the kind of candle I wanted. So the personal could get back in. Because now it looks like it's got 7 seconds. We've got the news to deal with. So I'll just see if there's any surprise with the news. Otherwise, I think it will just be now that we're closing above here, I think it will just be, because I overbought on the stocky, I'll just put a buy order in. I don't see if it does come back down, that'll suck. But I think it's more likely now we go to the top of the range, take out London high. So we should have the news out now. UK PMI 51, 48.2. It's a bit of a miss in the services. Is anyone still holding?
Yeah, I'm holding.
Cool.
Yeah, I'm holding.
Cool. Good work. That looks much better now. On the 5 minute, that's a good 5 minute close.
Are you in again, Hayden?
My entry's down here, so I'm not in it.
Oh, you're in. I thought you were out. Okay, you're already in.
No. I was out, but I was looking to enter again when it came down. So I've got an entry waiting here. It's not. I'm not in it.
Right.
Things gonna go without me now.
Usually the case.
Yeah, man.
There we go.
Now that they've picked up enough liquidity, all the PMIs are down. Now it's about running the highs. They know if they do want to take it down, they won't do it before these highs. So now it should just be a clean run up. So I guess I could just buy and target 20 pips. I suppose there's nothing stopping me. Risk reward kind of stops me, and we're a bit overbought in the stocky. What about the higher time frames? Yeah. No. If you're in it, good job. If I can't get in it here. It's just one of those bloody days. UK flying, is it? Yeah, they should actually weaken the pound. So if pound is weak, UK will be flying. Yeah, look at that. It's the direct correlation between weak pound.
Fine now.
Yeah. If pound is weak, UK 100 is very good. Anyway, I have to get cracking. So, what I'm looking for, what I would be looking for is for price to run these highs now. Okay. So it wouldn't make sense to turn around here. So I think it just continues. These are where the pain points are for sellers. And then people probably caught the low. So swing highs. This will be where the liquidity's sat now. So I guess one way of getting in, I could probably no, I won't do it. I'm kind of pissed off now that I got out, but trailing a stop below the lows. If it looks like we're starting to trend now, this is the first real start of a trend that we've had. So as long as we keep making higher lows, I think any wicks, like don't run a stop. I wouldn't run a stop underneath the low, but have it like I wouldn't have a hard stop that a wick can take you out. but wait for something to close lower. You know what I mean? So like if it broke below, it's not like you just get taken out, because it could just end up being a wick. But if it actually closed lower, maybe then you just get out, because this little trend looks like it could have come to an end. But a little wick down, if it just wicks down and closes back up, that should just keep you in it, because it just picks up more fuel to keep it running higher. That could be a way to sort of get in on a move like so, kind of chasing the trade, but with a system. And pick a time frame. If you're going to do that, pick a time frame that's trending. So that would be like, the 5 minute doesn't look quite like it's trending, but the 3 minute looks like it started trending. At the moment, this is just a reaction to these wicks up here. I think this will get faded out. It's just a first reaction. It's just low volume because of all this stuff that's going on. So all these little levels are just holding more weight, but I'm sure this is just a little reaction. Just come back to fill this like fair value gap that was created. If this closes as like a long wick to the downside, it's just picked up more fuel to keep on running these highs. If it closes underneath here, maybe there's a bit more of a problem. It's looking decent. I'm gonna have to go, guys. So I've really got to look after Maddie now. So boring day, unfortunately. So just typical PMI day, and typical day. We've got interest rates. No one really wanted to put on some sizable bets. So if you want to play the range, play the range. If price starts breaking down, then that could be a sign that this really was distribution. Okay, and we could see a bit of a move ahead of the news if they really got out enough of what they want to get out and let other people shoulder the risk. Because if we are breaking down below these areas and getting close to these interest rates, if the interest rates comes in and it's and the news is not great for German 40, I think trading underneath this area down would be a pretty decent play to correct this whole move. That's kind of what I'm looking.
When you say the German 40 though, Hayden, do you mean if they keep them on hold, it will still be negative or not?
If they keep it on, it's not so much if they keep it on hold. It's been doing pretty well with them thinking that this is the low interest rate. So I think there's more risk of it going up. But if it's more that if they talk about risk of the tariffs slowing down the euro, or if they it's more that. It's more if they keep it on hold, but then they say tariffs is going to hurt the eurozone growth, because keeping them on hold should strengthen the euro. But then if they say that eurozone growth is going to slow, then that could be a headwind for profitability for these euro companies, having a strong euro as well.
Yeah.
So I think it's more. I wouldn't read into the fundamentals too much about it. Just know that like around that time, that's a high risk event, and really, if institutions, if they had bought up and they really do want to buy low, they want to shake out anyone that's holding buys already. So there could be a reason why that they just latch onto any sort of headline, and if we are breaking supports, it'll be like there will be a buying opportunity. I think they could fill this area, but if it did correct this whole move, like I will be looking for buys, because I reckon if the fundamentals comes out and there's no real reason for it to be dumping, I think that will just be a shakeout, just to shake people out for buying, because institutions need volume to move. So they need to make it look pretty scary, shake out anyone that's holding buys, so that they can actually start accumulating a decent buy position, because they need sellers to buy from.
Yeah.
So it's
So
more like
when you go short first,
if you, I think you could for sure in this zone, knowing that, but also be aware of like they're selling to shake out buyers, so their intention really is to buy as well. So you could short into buys if that's your thing. I find it sometimes hard to short and then buy immediately. So sometimes I prefer just to wait for the move that I prefer to go with, because many times I've been in the shorts and I've missed the buys just because I thought it was going to go a little bit lower. But then if I was looking for buys and I wasn't in that short, I would say, oh, it's getting like it's at a decent enough level that I could probably look to scale in. Like I could probably dollar cost average into this if it goes even lower, if I don't go too much risk at the start. So yeah, if it's your MO to go short and then long, I think I wouldn't talk anyone out of it, because I do think we can correct this whole move on some negative headline that creeps up. This 5-minute candle, that was kind of disappointing. Just reacted to these wicks again. Now we're just firmly back in this range again. So it's just a shit day, man. Just a bit. Next PMI day, we start late. I'm not going to sit through this again. It's just a waste of time generally.
Yeah.
Ended up just BE for the day, and literally been sat here for over 2 hours now with nothing to show for it, and just watching this just do nothing. So if you'd had a good session, good work.
Members of the Palace Ultras group, the Homesdale.
Yeah, the TV's on. Just okay. All right, guys. Good luck for the rest of the day.
Thanks, Hayden.
Be careful around this news. We will get some.
Bye, everyone.
See you, Denny. We'll get some clear signals after the news as well. So for like tomorrow and next week. Okay. So take care. Take care.
Thanks, Hayden.
I'll see you tomorrow morning. Bye bye.
Cheers, Hayden. Cheers.
Thanks, Hayden.